All right. Shreyash Devalkar joins us, fund manager with Axis AMC. Shreyash, good morning. Thank you for joining us. We've had a great run. And we've had a great run largely because of flows and a big uptick in economy. What is your view? Do you think markets now are fully priced? Are markets pricing in a lot of good news?
See, when it comes to the absolute levels of market and stock, always that belief or that feeling is there in everyone's mind. But when it comes to what next, I think broadly most of the news in terms of possibility of vaccine, in terms of what easy monetary and fiscal policy can do to the valuation, that broadly is there. Now it is real hard work in terms of how economy shapes up and how various sectors come up. Because mostly when market falls from the bottom, everything runs up based on obviously the merit of individual sector, and that has happened. There is one more element to this rally is after pandemic when it started somewhere in February, March, April period. There was a lot of skepticism. There was a doomsday scenario. And from that, when it comes to now Q2 result, what we have seen across the board, not only in large cap, mid cap, across the board, versus those expectations, many companies surprised. They surprised on top line. Actually, economy surprised on how it can come back to closer to normalcy soon, fast. Probably barring few sectors like hotel, hospitality, and tourism-related sector, wherever the impact is very high. But other sectors shown very much very good resilience. Secondly, on the cash flow front and the margin fronts, most of the organized sectors, and obviously they are in the listed space, have shown very much resilience on the cash flow management, margin management, cost management. And because of that, the Q2 result season has been a surprise for everyone. So this couple of reasons have, along with the liquidity, have led to this rally. For it to have more legs from here on, obviously how the pandemic pans out from here and whether the economic recovery is really broad-based or not, these questions, the answer to this question will take it further.
Given that 5 PSUs have considered a buyback, BPCL divestment is moving in the right direction. Is there merit in buying PSUs, select PSUs, which are now so-called deep value stocks?
See, when it comes to value investing, obviously there comes time period. And when it comes to value investing, in my opinion, normally, whether it is a value or growth, normally a stock moves on triggers which are based on, primarily if they are based on growth, then those trigger you normally get more regularly. And that's where your return profiles are more regular in nature. But when it comes to other value stocks where the growth profile is not as regular, in that case, you tend to depend on individual trigger, and that way it becomes very a game of patience versus your ability to stand there. So obviously, the value stocks with the stocks which are cheap, they will give you return. But then it is important to watch what trigger you are playing for. Are you playing for a regular growth or something like divestment, wherein it is the ability of anyone to predict is very limited in nature?
Shreya, so would you now move towards the cyclicals as seems to be the overarching theme currently? Are you still a little cautious at the moment, or do you also see that recovery kicking in? I mean, while it's already kicked into a large effect, but actually catching up with the kind of move we're seeing on the stock prices?
Yeah. So as I said, yes, the recovery coming back to probably in normalcy in some sectors, coming back to 90% of normalcy in other sectors was probably that relatively easier task now. In hindsight, at least it was proven. And the stock prices are also back to normalcy or in some cases higher than this. So it is very much important now. And again, on the news flows also when it comes to because the elephant in the room or the bigger issue has been pandemic, and their solution is vaccine, and the news flows around that are also broadly there. So now from here on, how it is going to get distributed, how it is going to be effective, how long it takes to get distributed, how long it takes to control it, and how fast the sections of economy which are still got hurted, like as I said, travel, tourism, hospitality, malls, retail industry, how fast they come back. So that section of economy coming back faster, sooner. Obviously, that hard task is now left, and that especially is important now from the prices perspective.
Sure. So then within that, which are the sectors that you're eyeing with, looking forward from where we are right now?
So the sectors across the board, what we are looking at is companies which have shown very good resilience. So the typical pecking order when we go through any kind of crisis has been that instead of sectors, it is more to do with the companies that have shown that they can consolidate, they can withstand pressures, extreme things like. So if you take the financial services sector, then the companies and financial services companies who have withstood the impact of pandemic, IRNFS crisis, before that various other things like demon, and you have to go through the entire list and then see which have shown the resilience during all sort of crises, and that across the board. So when it comes to every sector. So this year, so this result season, especially the Q2, we are watching out for the companies who showed very good resilience on the cash flow profile, who have managed that very well compared to others. That shows the strength of business model as well as the strength of companies, how well they can manage. Obviously, in some business models, it becomes very difficult, like retail industry or hotel industry. But then you need to look at those things, how these companies are managing during this time, and select based on that. That is broadly the journey has to be.
I was just going to come to that. Given that your mid-cap holdings as well have a large exposure to some of the retail plays, very different formats, but like an Avenue, Supermarts, or a Trent, for instance, do you believe that there is, further headroom to go when it comes to some of these retail stories? Because they've been really stories all about valuation up until now. But do you sense that they can try and capture more market share, given that how digitized the world has become in the post-COVID era?
Yeah, sure. So that post-COVID era, so that question comes to everything when it comes to retail industry. It comes to even commercial real estate, whether everyone is going to go back to the work and or not. Whether work from home remains a norm even after COVID. So that kind of thought is there across the board. But in that, we should focus on, as I said, the parameters. As of now, the jury is not out whether people will shift their behavior totally and never go back, and they would not go back the way they should go earlier. Because once the things start, probably people would prefer to be more social rather than sitting at home. So considering this, again, a jury on that is not out on that broader top-down call. Having said that, that's where we are focusing on the companies which are showing good control on the cash flows, companies which are showing good resilience in terms of the impact on earning and especially the cash flows during this time period. And that's how we would like to go ahead. As far as broader question on whether retail industry get hurt because of digitize and home delivery thing. Again, in US also now it is obviously getting, or even developed markets, it is getting obvious that the multi-channel is the norm. It is not that only one thing operates, and that's where we have seen multiple number of time the e-commerce companies are investing into brick and mortar and vice versa. So that is happening, and that journey is on everywhere. And that's where in India also companies are adopting to both channels.
Yeah, absolutely. You know, large part of the mid-cap story up until now, Shreyansh, has really been all about specialty chemicals. Is there still a meaty investment in specialty chemicals, or do you think the best of the story is behind us? Given how sharp the up move has been, and this is not really a COVID story, most of these stocks already began their move much before actually the pandemic hit.
Right. Actually, specialty chemical story as a story started, in my opinion, somewhere in 2014 end. 14-15, that is the time when it started, when as a market we started focusing on how China is trying to get out of some of the chemicals. On the other hand, India has its own advantage. Indian ability and the skills in the chemistry as a field of knowledge is really one of the advantage area for India as such than many other countries. And we have shown that across the board. We have been one of the few countries who exported drugs, API, formulations. This is, at the end of the day, everything is boils down to the chemistry, and India has that chemistry skills across the board. And that's where this journey of chemical industry, along with certain starts getting aligned because of China issue or other issues, and individual companies also have strengthened their capabilities. If you take any of the leading chemical company, they have their ability to manufacture the product in most cost-effective manner and sell the byproducts as well. So such capabilities many of these companies developed over a period of time, and when the time got it right for them, they started benefiting from that. So the valuations for these companies, in my opinion, started moving up since then only. So it was sub 10 P to 15 to 20 to 25 to 30. So it has just kept on increasing, and probably that is the industry in mid-cap space, mid and small cap space, that has delivered consistently. I'm not talking about all the stocks, but some of them actually delivered consistently year after year compared to any other mid-cap segment as such. And that's why that industry has emerged as a potential good area. So the attribution goes to both the skill set in the chemical industry in India, in Indian entrepreneurs, Indian professionals, along with all the stars getting aligned. And that's where some of the companies who were only in basic chemical, they started moving up the value chain, by manufacturing more complex chemicals, then up in the agrochem, pharmaceutical. So the more you move into these, the complexity keep on increasing, and that journey has been there. That journey, whichever company have completed or actually not completed there, who actually laid on that path, they are the ones which are actually doing really well as of now. So as long as these companies can get out of their old orbit and move into the new orbit, like from basic chemical to agro to pharma or more complex chemistry, probably this segment has a good potential even now. Valuations, obviously, yes, it is high as always everywhere.
The interesting part for the month of November shares has been record flows from DIs, from FIs, and record selling from DIs. Typically, when markets go higher, retail investors want to buy more. How come the other is happening? ये गंगा उल्टी क्यों बह रही है?
Yeah, sure. That also, if you look at probably in June to September, that time period, we have seen a lot of retail participation. I think we must have discussed on that. The retail participation is very high in the market. Frankly, in last 1 month, this is what we are talking about is the DIF flows. So frankly, I am also not really able to grapple based on 1 month data what is really happened in last 1 month when it comes to the flows as such. But if you look at overall rally from bottom, yes, there has been retail participation in the initial part, much higher than everyone would have expected there.
Shreyash, thank you so much for joining us this morning. Great chatting with you and getting your perspective on things and also the recovery going forward.
Thank you very much.